Hey everyone, I'm Laura Adams, and this is the Money Girl Podcast. I'm a finance author, speaker, and consumer advocate who's been writing and hosting this show since 2008. I'm so glad to have you with me this week. And if you're someone who works for yourself, or maybe you're just thinking about creating a business, I would love for you to check out my newest book, which is an Amazon #1 new release. The title is Money Smart Solopreneur, a personal finance system for freelancers, entrepreneurs, and side hustlers. It's on sale everywhere books are sold as an ebook and paperback, and the audio version is on the way. The book is a complete guide for anyone who wants to build a business and a secure financial future. And one of the topics that I cover in the book is about the self-employment tax, which is so important to understand when you work for yourself, either part-time or full-time. In doing interviews about my new book, a common question that is coming up is, well, Laura, what's the biggest mistake that solopreneurs make? And my answer is, by far, not understanding how taxes work when you are your own boss. That is definitely the answer. So in today's show, we're going to talk a little bit about that. And, working for yourself is definitely very exciting and financially rewarding. But the downside to self-employment is that you have to understand some special tax rules. And it's really not that complicated once you understand it. But I think a lot of people have a bit of a hurdle kind of getting through it, especially the first year that they're in business. And maybe even if you've been in business a while, you may not be really clear about what those taxes are that you're paying. So we're going to cover that. This podcast will explain what the self-employment or SE tax is, how it compares to payroll taxes for employees. You'll learn who must pay the SE tax, how to pay it, and some tips for staying compliant when you work for yourself as a sole proprietor or with an incorporated business. And if you want to go back and review what we cover in the podcast, you can find the notes for the show. They're always in the Money Girl section at quickanddirtytips.com. Just look for episode number 657 called What is the Self-Employment Tax? So what is the SE tax? Well, in addition to federal and applicable state income taxes, everybody has to pay Social Security and Medicare taxes. These two social programs provide you with retirement benefits, disability benefits, survivor benefits, and Medicare health insurance benefits. Many people don't realize that when you're a W-2 employee, your employer must pay a portion of your taxes for you. This is thanks to the Federal Insurance Contributions Act, known as FICA for short. Employers are generally required to withhold Social Security and Medicare taxes from your paycheck and then match the amounts that you owe. So, in other words, your employer pays half of your Social Security and Medicare taxes, and you pay the remaining half. But employees do have to pay 100% of federal and state income taxes, which also get withheld from your wages and then are sent to the government on your behalf. And by the way, there are some states that don't have a state income tax, so the state tax issue really just depends on where you live. But when you have your own business or any income from self-employment, you're responsible for paying the full amount of income taxes, including 100% of your Social Security and Medicare taxes on that income. All business owners with pass-through income must pay the SE tax. That typically includes every business except C corporations or an LLC that has elected to get taxed as a corporation. And when you have a C Corp or you get taxed as a corporation, what's happening is you're working as an employee of your own business. And when you're an employee, that means you're required to withhold all of your employment taxes. That's the federal, the state, the Social Security, and the Medicare from your salary or wages. But other business entity types get income that just passes directly to the owner. So that's what is known as pass-through income. That income gets included on your personal tax return. So that's probably the majority of you that have a small business or are a solopreneur. You've got to pay the SE tax no matter if you call yourself a solopreneur, independent contractor, or freelancer, and even if you're already receiving Social Security or Medicare benefits. So let's review how much the self-employment or SE tax is. For 2020, the SE tax rate is 15.3% of earnings from your business. And so we can break that down into a combination of Social Security tax at 12.4% and Medicare tax of 2.9%. So add those together and you get the 15.3% total. Now, for Social Security tax, you only pay that on a certain amount of your income. You pay it up to a maximum wage base of $137,700. You don't have to pay any Social Security tax on additional income above this threshold. However, this threshold has been increasing over the years, and it is likely to continue creeping up in the future so that we can continue funding Social Security. So that rate is likely to change in future years. However, for Medicare, there is no wage base. All of your income is subject to that 2.9% Medicare tax. So if you're self-employed and you've got net income less than $137,700 this year, you're going to pay self-employment tax of 15.3%, plus your ordinary income tax. So that's your federal and any applicable state income tax. Remember that your future Social Security benefits will get reduced if you don't claim all of your self-employment income and pay the Social Security tax on that income. So that's not something you want to do. You definitely want to make sure that you are claiming all of that income and you're paying the right amount of tax on it so that down the road, when you need the benefits, they're going to be there in the largest amount possible for you. Now, if you have a high income, you must also pay an extra tax, which is known as the additional Medicare tax. It's 0.9%. And this is a surtax that went into effect in 2013 when the Affordable Care Act, or ACA, was passed. And it applies to wages and self-employment income over certain amounts by tax filing status. So for 2020, if you're a single taxpayer and you make over $200,000, this Medicare surtax is going to apply. Or if you're married filing jointly and you make over $250,000, again, this surtax will apply. So as I mentioned, when you're an employee, your employer withholds money for various taxes from your paychecks and sends it to the government on your behalf. This is known as a pay-as-you-go system, and it was created to make sure that you pay all taxes owed by the end of the year. But when you're self-employed, you've also got to do something similar. You've got to keep up with taxes throughout the year. And the government requires you to make quarterly estimated tax payments. You don't have to do it twice a month or once a month. It's got to be quarterly. If you expect to owe at least $1,000 in taxes, and that includes the self-employment tax, you are required to keep up with a quarterly schedule. Each payment should be 1/4 of the total amount of tax that you expect to owe for the year. And estimated payments are generally due on April 15 for the first quarter of the year. Then they're due on June 15 for the second quarter of the year. Then due on September 15 for the third quarter and January 15 of the next year for the fourth quarter of the year. So when that due date falls on a weekend or a holiday, it shifts to the next business day. And your state may also require estimated tax payments for your state taxes, and they may even have different deadlines than what I have mentioned here. So be sure to understand any state deadlines that you have as a business owner. And another really confusing thing about being a business owner is figuring out what these estimated payments should be. It can actually be really confusing because a lot of entrepreneurs don't have the faintest idea how much money they're going to make from one week to the next, much less how much they're going to make for the year, and then how much tax they can expect to pay on that income. Nonetheless, you got to make your best guesstimate. If you earn more than you estimated, you can pay more on any remaining quarterly tax payments. And if you earn less than you estimate, you can reduce your estimated payments or even apply any overpayments to next year's estimated payments. This is something that a CPA or a tax accountant can really help you with. And there are also certain bookkeeping programs such as QuickBooks. There's a version for the self-employed that will actually help you kind of keep up with what it believes your estimated payment should be for the year. So you can really get a lot of help from software and from an accountant if you need it. And here's another thing to know about paying estimated taxes. If you or a spouse, if you file taxes jointly, have a W-2 job in addition to your self-employment income, you can actually increase your tax withholding from the earnings at your job instead of making estimated payments. To do this, you or your spouse must file an updated Form W-4 with your employer to have that withholding increased. Again, an accountant can help you with that. And the IRS has a tax withholding estimator on its website at irs.gov that can help you calculate the right amount to withhold from your pay for your individual or your joint taxes. When it's time to pay your estimated taxes, you can use Form 1040-ES, that's the estimated tax for individuals, or if you're incorporated, use Form 1120-W, that's the estimated tax for corporations. And these forms contain blank vouchers that you can use to mail in your payments or even submit the funds electronically. So these forms are designed to help you figure it out and then to have an actual voucher to send in to the government if you wish. And as I mentioned, there's a lot more information about taxes and how to run a small business successfully in my newest book, Money Smart Solopreneur. Part 4 is called Understanding Business Taxes, and it covers everything you need to know to comply and stay out of trouble. I can tell you from personal experience that when you've got a complicated situation, such as having business income or even having rental income, one of your new best friends should be a tax accountant. You want to find one who listens well and seems to understand the kind of work that you're doing. A good accountant will help you calculate your estimated quarterly taxes, claim tax deductions, and save you money by helping you take advantage of every tax benefit that's allowed when you're self-employed. And in my book, I recommend various software, online services, and apps to help you track expenses, deductions, and all the tax deadlines that will keep your business running smoothly. I hope this show has helped you understand more about the self-employment tax and estimated taxes. If you have a question related to being a solopreneur, a small business owner, or personal finances, I would love to hear from you. There are many ways that you can reach me. One is to visit my website at lauradadams.com. There's a contact page where you can email me directly. I would also love to hear your voice on our message line. Just call 302-364-0308. That's all for now. I'll talk to you next week. Until then, here's to living a richer life. Money Girl is produced by the audio wizard Steve Rickyberg with editorial support from Karen Hertzberg. If you've been enjoying the podcast, please take a moment to rate and review it on Apple Podcasts. You might also like the backlist episodes and show notes that are always available at quickanddirtytips.com.